Hello traders, this is Orlando for Snipe the Trade, and today we are going to look at the pound by analyzing the GBPUSD, and we're going to see what opportunities we are going to be having, or what opportunities this currency pair can yield on the next trading week. So we're going to go to the charts right now, and first of all, I'm going to show you what we are writing here at Snipe the Trade. You can see that we are heavily short the pound, and the reason we are heavily short the pound is because since the Brexit vote, the pound has been under immense bearish pressure, and after the election of the new prime minister in the UK, the pound saw a surge for about, if I'm not mistaken, 500 pips or so. That's right, 550 pips to a key level of resistance, which is a very strong level post-Brexit. You can see that we have the Brexit drop for about 2,000 pips from the highs at around 150 to the lows at around 132. That's 1,700 pips, okay? Then we had a relief, a rally, and we continue to move lower. And this is what I like to call a very strong area of resistance post Brexit, okay? And the reason is that this is the post Brexit high, and this is where we are trading, or where we stopped the rally and gave us a very nice opportunity to go short. The reason we like the short side of the pound is because, one, we had a Brexit vote, and the UK only has 2 years to complete the exit from the from the European Union, I'm sorry. And that means go through all of the free trade agreements that they had, the immigration policies, make sure that everything is set for the UK to be completely independent. That is going to take a lot of work, and I think, and we think actually, that 2 years is not enough time to do that. But that being said, we also think that on the next meeting, the Bank of England is going to announce more easing. That means a more bearish pressure on the pound. And you can see right here on Friday we had the no, it was on Thursday, I think, the interest rate decision in the UK, and the Bank of England decided that they were going to maintain it at 0.5. We had a spike of about 2,000 pips to that zone that we call the briefly, I'm sorry, 200 pips to that zone that we call the post-Brexit highs, and then price dropped immediately. Okay, so this was very news related spike, but then we hit again that 88.6 and that post-Brexit highs for a natural short opportunity. So basically we went short 3 times, and right now we are trading inside of this continuation pattern. So you can see we are also making what seems to be a head and shoulders. We have the first shoulder here, we have that head at the 88.6 and the post-Brexit highs, and then we are kind of still making that second shoulder with the neckline drawn right here with that dotted white line. We have calculated the targets on the breakout to the downside to calculate the targets of our short position, and we did it by calculating from the high of the head to the neckline and then extrapolating that distance to the possible breakout zone, and that gives us a target of the post-Brexit lows. Now, these post-Brexit lows are not only the post-Brexit lows, but this is what we like to call the extreme bull bear zone. This means that if these lows are going to break, or if these lows break, then we can expect extreme bearishness on the pound, taking us closer and closer to parity. Okay, The post-Brexit highs is what we like to call the extreme bull bear zone 2. But because if we break to the upside, we can expect bulls to start to jump in and buy the pound. But because of what we already said, we think that a break of that 130, 134.62, 135.35 area is very unlikely. And because of the announcement, well, not the announcement, but because of the expectations that on the next meeting, the Bank of England is going to announce more easing, meaning that they might cut the rate to a 0.25, which is a historic low. We are going to get some very important bearish pressure in the pound. We are anticipating that move, and I really think that if we break with that neckline, we are going to hit our targets that are going to be around 128.60 before the next meeting. And the reason we are going to put our targets right here around 128.60 is because we want to get filled on our targets, and we are not going to use the complete measurement from the high of the head to the neckline to put our targets, because this is a very strong zone, and as you can see, it has been tested lightly, and right here you can see that we have a very long spike to the downside, which can mean that here is where short sellers short sellers took profit, or this is where we found buyers. It really doesn't matter what happened, but because the reaction was the same, we had a jump in price for about 200 pips. Then we retested that zone and we jumped 550 pips to the post-Brexit highs. So basically that is our trading plan. We are still writing it down, and we are going to wait for that continuation pattern, this wedge right here, to break, and we are going to wait for the reaction of price action to this trend line or to this neckline. Then when we break to the upside, we are going to be very careful to see the reaction to this zone. This is a very important pivotal area in the GBPUSD, because as you can see right here, after we broke with this also continuation pattern, as you can see, we were trading inside of a kind of a wedge at the time. This is where we saw some bulls getting into the market, or some taking profit. But in any case, when we broke to the downside, this is an area that we tested once, twice, 3, 4, 5 times maybe before breaking to the upside with this big absorption candle. So basically this is a very important pivotal area where we might take some partial profits before moving we are going to be taking some partial profits here, definitely moving our stops to break even, and just a few pips below our last entry, and we are going to let the rest of our position ride to our targets at around 128.60 for about 490 pips from position 1, 400 pips for position 2 from position 2, and 330 pips from position 3, which would mean that we are aiming at more than 1,000 pips in this short position on the GBPUSD.